All right. Welcome, folks. Happy Friday. Welcome to today's webinar. I have a very, very special guest for you. I am your host, Ryan Faloona. I am here with Steve BigBeat Orr as always. And today we are both very, very proud to announce that we are here with Jerremy Newsome. So welcome, Jerremy. Thank you so much for joining us today.
My pleasure as always, guys. Thanks for having me.
How are you, Jeremy? I'll tell you, you might have literally more energy than me in the whole world. I don't think there's anybody out there that has more energy than me.
Thanks, man. It's I got it from you, actually. You rubbed off last time I was at Benzinga. You gave me a gorilla hug. So, yeah, man, it was really great seeing both you and Ryan over there in June. Can't wait for this year, man. It's going to be great.
You know, it's very interesting when we the Traders Summit in New York City, you know, we always see all these different types of traders. And we always say that not one trader is the same. And that's true of anybody, right? We're all different people, thank God. But you know, we have a lot of different styles of trading. And I was very, very impressed with your style of trading and the openness of your style of trading. Your company's real life trading. You just show exactly how you do it.
Yeah, I appreciate it, man. I mean, I love day trading and I love long-term investing. So it's like a really interesting blend. And I also love options. So it was a good thing when I first started out, and it was a bad thing because I kind of dove in and started with options and lost a lot of money like most people do.
Sure. I was going to say, Jerremy, the same thing happened to me. When I first started with options, I lost a bunch of money, but you know what? I love them today. Steve helps me all the time, so can't wait.
Yeah, man. Yeah, exactly. So that's one of those situations where, you know, sometimes you gotta learn by fire. And It was one of those trial by fire situations.
You know, that is one of my rules, is that trading options is not scary. For me, I was scared when I first started getting into options. The only way I did it was to, you know, a lot of times people trade options and just try to go slow and easy to learn them. I didn't. I threw myself in the deep end, but I also wanted to learn. I read all the books, and it meant absolutely nothing to me. The books are only good if you're for me, only learning about the Greeks and the contagion and crushing of time and volatility. But options for me has been mostly hedging and to make my my beer money, is what I always call it.
Yeah.
The lotto calls. Yeah.
Yep.
All right. Well, let's get right into it. Jeremy, the story of your background always makes me so happy to tell people this. You were a blackberry picker.
Yeah, man. That's kind of how it all started. You know, like I watched the movie Forrest Gump when I was 6 years old. That was back in 1994, right when it came out. You know, my dad, my oldest brother, Roger, we were watching it, and he talked about, he said a phrase I had never heard up until that time. He said that we invested in a fruit company and we never had to worry about money anymore. I just never even heard that phrase uttered out loud because at the time I was pretty financially, poor with, my family and whatnot. So I would love to not worry about money anymore. I was like, man, that sounds like a really cool premise. And I asked my dad, what is investing? What is the fruit company? So, he told me all about Apple. And I was like, we need to do that. We need to invest. We need to do what Forrest Gump did. And it was one of those situations where he simply said, it doesn't quite work that way, man. This is a movie. You can't just base your investing advice off of a film. And ironically enough, I kind of did. And I went out and picked blackberries and sold them door to door because I didn't have any other way to make money at the time, to my knowledge. And yeah, man, sold them and then made like $1,300 that summer. And ended up taking that money and buying some shares of Apple, with the help of my dad. And that was back in 1994. So it was.
Oh my goodness! I couldn't even imagine what that stock's worth today.
Well, the cool part is, so he actually ended up matching me because that was one of the things he promised. He was like, you know what? Hey, if you bring me some money, I'll match it. Come to find out, he borrowed it from my uncle, but that's kind of irrelevant.
Oh.
So we actually bought like $2,600 worth of Apple in 1994, and I think the value is like 34 million and some change.
Gee,
yeah.
Oh my gosh.
Which is incredible because that's the ironic part about it is it's like that would have been the catalyst to not actually have to worry about money anymore.
For that's 1994. That's after the movie came out and after Forrest made his money. So, oh my goodness.
Yeah.
And
Yeah, man.
Jeremy, I got to say that part of the ironic part there is that your fruit background, you went and bought Apple stock with it, and then it worked out. Like, to me, that's a real ironic part. I love that. I love little stories like that. That's too good.
It's really weird, man. It's strange how that all kind of culminated and, it ended up happening. But as you guys all know, the other stories, I sold them in 2000, at the top of the tech bubble, accidentally, because we were moving at the time from Georgia to Florida. So I sold them and then made like 12 grand. I mean, quadruple my investment. So my dad was like, yeah, great job. You're never going to make a return like that again in your life. You need to invest in something safe. So I bought bonds. When I was 18, so 6 years later, I sold them and I had like $12,074 or something.
And all that money went to the University of Florida, I understand.
Yeah. So University of Florida, that's why I went to school from 2006 to 2009, which arguably was one of the best. That's the best time to ever go to UF. That's when we won back-to-back football championships and basketball championships. So it was a really good year.
Yeah, Danny Werfel, I believe, back then. All right, so let's get right into it.
Yep.
We are very good here at Benzinga making sector calls. Ryan and I will tell you, we lately have been hot on it. Last one I called was space. We killed that one. Before that was infrastructure. We've had all kinds of interesting plays. Been really good. And one that I said would be the holiday sales for like Amazon and Costco has been very good. And you had a pretty good call about a month ago. You said the gaming stocks, they absolutely killed it. So let's get right into it. What is your sector call coming up?
That's a great question, man. I think, obviously, other than just being bullish on Google and Netflix, because a lot of people are bullish on those, Facebook, the big names, I think their earnings were very good. Pinterest, I have a lot of shares of Pinterest. I'm pretty bullish on Pinterest. They did very, very well in earnings. No one's talking about Pinterest right now. And they're a social media company that's just purely being slept on, I think, in the industry. But it's hot, man. They had really good earnings. They're doing very well. But the overall sector, man, I'll probably stick with gaming because I think it's exciting. I think the gaming stocks have a long way to go. The Penn National Gaming, ticker symbol PENN, that was one that I liked a lot starting in January because there was tons of rumors of them buying Barstool Sports, and there was discussions of FanDuel and DraftKings and a lot of this going public and being acquired and being bought out. The thing is, man, that's becoming more and more popular, I think the Chiefs winning the Super Bowl was very good for football and for gaming because it kind of got the Patriots bandwagon dethroned a little bit. I don't know if Tom Brady's going to win another Super Bowl or not, but he probably will. But either way, FanDuel and DraftKings and people doing online, not necessarily betting, but let's call it betting. Online betting is going to continue to increase because right now there's a hold on it here in the U.S., but they're trying to figure out ways to make it legal. And as they figure out ways to make it legal, companies like Penn National and Boyd Gaming, BYD, I'm pretty bullish on those two. I think Penn and Boyd need a little bit of a pullback at this exact second in time. But really over the last few weeks, they've been doing incredibly well. And I think they're going to keep going up, man. I like them a lot.
And real quick, Jeremy, I just want to jump in here. First of all, I don't really bet a lot. I love football. I love all sports. Yep. Football is my favorite sport to watch. And I'll be honest, I've never really bet on football very much. Maybe a squares here and there with some family or friends for the Super Bowl. But as soon as daily fantasy came out, as soon as FanDuel and DraftKings were out, I was all about it. So I cannot agree with you more on that premise. That totally turned me on and to gambling on the weekend on football. And you can do it really easily. You can do it with $10, $15, $20, not put yourself in trouble. Super fun, makes the games more exciting. So I think that's a really great call. I went ahead and started pulling up these charts here that you were mentioning too, so we can get a look at them.
Yeah, and I appreciate you doing that. But you're right, man. That's the thing is it's not insanely overpriced. It's not that premiumly expensive to purchase, like you said, some bets. You could do a $2 bet on FanDuel once a week with some friends and just, again, it's just fun money, but it's exciting and it's cool. And those type of institutions are growing outlandishly large. Fantasy football is growing, I think, at 33% or something annually every year for the last 20 years. It just continues to get bigger. And that's amazing to me. And it's going to keep growing because what's going to end up happening, Ryan and Steven, at some point is you're going to have these small switches where people are going to start making bets on other things, right? Initially, FanDuel and DraftKings was just football and baseball. Now it's like soccer and hockey. And then you're going to start doing cricket. And then it's going to start going into online gaming, right? Like esports, that you can bet on people playing video games and you can bet against your favorite, e-gamer or whatever. That's going to happen. I mean, that's just slowly the way it works out. And so Activision, ATVI, I'm just an e-gaming fanatic right now, man. Not player, but just investor. I think Activision, ATVI, is poised without question to get back up into the 85 mark, where it had that nice little quick, beautiful drop. The chart looks very similar to NVIDIA. So just from a pure chart perspective, you had the really, really big drop in October 2018 on both NVIDIA and Activision and some of those companies that are really in that somewhat space. But the ATVI, are you doing a chart comparison? Yeah, you are. What a pro. What a pro, Ryan. So yeah, look at that. Very similar. And you can see that a lot of these are starting to kind of claw back. And I love Activision, man. I mean, they're going to keep cranking out some really good content, but they're the ones who are owning pieces of that pie, that e-gaming, esports piece of everything.
So one of the sectors, the calls that I had made was to lay off of the gaming sector right now and wait until the holiday season. I'm beginning to think that a lot of the gamers like Activision, Take-Two, those companies are going to hold back their games until the new boxes come out, the new PlayStation coming out, the new Xbox. And so I'm feeling like not to put my money in there just yet until maybe the summertime, or are you saying this no time is better like today?
Oh, good question. On Activision, I would say yes. They did really good earnings. I think that no time is like the present for Activision right now.
Okay.
But I do agree with you that it's going to continue to ramp up after some of those new boxes, some of the new stations actually come out. But a lot of this transaction period is taking place with Activision doing a lot of their online stuff. I mean, it's not necessarily the actual hardware games that they're creating, but it's the software games on your phone. A lot of mobile devices are getting really, really popular right now, and they're working on some really, really good mobile games. The Tencent, I don't know if you guys are familiar with that one, TCEHY. I mean, it's one of the biggest companies in the world, actually, that no one ever talks about. But Tencent owns, I think it's like something in outlandish, like 57% of every mobile game is owned by Tencent.
Crazy, yeah.
And this is an over-the-counter stock. It is a Chinese name, but they're the Chinese Berkshire Hathaway. That's my honest opinion. I mean, this company, the size of this company is just outlandish, and it's an unequivocal mathematical fact that it's going to continue to go higher. But I think a lot of Tencent and Activision are going to be competing, and I think it's a good thing. So if you want both parties, hey, man, why not?
So, with Activision Blizzard, I think their biggest one probably has to be Call of Duty, right? Are you finding that they're picking up more players because of playing on their phone? Are they different players? For me, I don't play. I play when I my cell phone. I play solitaire or whatever. I have other games, but when I play my Xbox, I'm playing Call of Duty. I got the headset on. Do you feel like there's two different players there?
I do. I think they're trying to capture two totally different players because so for example, like me, they're targeting customers like me who they can, all the research and data they have of, okay, this guy is not going to play an Xbox or PlayStation or whatever, but he will play 10 minutes, on the John while he's chilling, and he'll play this particular type of game. So I think mobile games and mobile devices, they're going to become more and more powerful. That's what's interesting. And you're going to have more connectivity and more things that you can integrate with your phone. I don't obviously think that the actual hardware device, the boxes, are going to go away anytime soon, like PlayStation or Xbox. But I think that the devices on your, the phone devices are just going to continue to ramp up and scale up over time.
So would you say Glue Mobile or Zynga?
Oh, good question. Good question. Glue Mobile, let me go check on their earnings really quick because I think that they were right around the corner. Yep, they were. So Glue Mobile, I do like. I really appreciate bringing that one up. That had a really, really beautiful gap as far as a technical chart. The earnings weren't outrageous, but they weren't awful. So on a technical basis, I really like GLUU.
Close that gap, huh? Yep.
Yeah, man, the gap, you had a really good pullback. I think I can even draw on your screen. Let me check this out. So you had this really nice run up here, and then the pretty calm, pretty fast sell off. But even that was only approximately 60% of the major move. So as you start getting this consolidation, getting these bounces occurring, that just showed me accumulation. The fact that we took out these recent highs over here with a nice gap and good close does say that I think based on just pure technicals, you could start to look to buy some dips on Glue Mobile, and it's not a very expensive stock either.
There you go.
No, it's not. And really quickly, I just want to add in here, as you can see, the why is it moving at the top here? Following the earnings that you had mentioned, Jeremy, multiple firms maintained bullish ratings and raised their respective price target on the stock. So analysts seem to be confirming exactly what it is that you're saying. And I got another really quick question for you. You were talking about mobile games or games on mobile devices. What do you think about games that are free to play, but also offer a microtransaction system on the back end?
The greatest idea that has ever been created, honestly, because no one likes waiting. So all they're doing is saying, hey, man, here's some free stuff. And everyone's like, I love free stuff. And then they start playing. And it's like, all right, well, if you want to upgrade your character, instead of waiting a day, just pay $1 and you'll get it done right now.
Yep.
And people don't think that feels like a lot. So they'll do it and they'll keep doing it and they'll keep doing it. So in a relation to spending $60 at one time for a game, you're spending $1 20 times a week. Genius, right? Genius. And man, like that is just such a fantastic approach. I forget which South Park episode that was on, but I think it was like 2 or 3 years ago. South Park had a really phenomenal episode on microtransactions. They're just kind of making fun of that whole community and that mindset and that stigmatism, but it's genius, man.
It is genius. And I you know what? I'll admit that's actually worked on me. I've been a huge sports gamer for a long time. And when I found out that I could get better players on my ultimate team by paying a couple of bucks here and there, I did exactly what you said. I was like, oh, a couple of bucks, no big deal. But a couple of bucks 20 times, it adds up. And it is absolutely addictive, and it is absolutely just a great idea. Really, really solid plan.
Yeah, I will poo-poo on one industry though. Since we're talking bull, let me talk some bears. Yeah. And the unfortunate part, Steve, is I'm probably, well, not probably, I'm late to the party, but I can keep more people out of it, I think, with what I'm about to say. The weed industry, man, is way overhyped, way overworked. There's this new guy, I'm not going to mention any names, but there's this guy on YouTube that I've been watching, and he's been pumping ACB as hard as he can. He's only been trading, I think, maybe like a year and a half, and he has really good thumbnails on YouTube, and so he built up a following. I think he has like 20,000 subscribers, but he keeps like, ACB's going higher, and that's been since like $5. And I'm just like, man, I don't know. Like I don't get it right now. And here's the unfortunate part. And I'm gonna sum this up as good as I can with saying one of my great friends named Seth Mosley. He lives in Nashville. He's a multi-Grammy winner. Love the dude horrendously amount. He's just such a great guy. He mentioned that right now, weed stocks are either the greatest time to invest or the absolute worst, and I don't know which one. So that's kind of my thought. So if you do play ACB or CGC or Cron or Tilray, have an absolute zero perspective, which is what I say is if you're buying the stock at $1.90 or whatever it is, have your risk at zero. So do your math. If you want to lose $1,000, do 1,000 divided by whatever price you're buying the stock for, and that's how many shares you should buy. Because at this point, it is very possible that you're going to have some reverse splits very soon, and they're just going to kind of keep sliding down because the market's not going to give up on these right now. But I think there's more pain ahead for a lot of these positions.
Yeah, I mean, in the world of cannabis, everybody thought that this was going to be the biggest thing in the world. What I think is going to happen now is this the end of it? I've been poo-pooing cannabis for about 4 months now. I will tell you what I do see though. I do see M&A. I do see mergers and acquisitions happening in here. The big companies are going to survive. The small companies are going to either get gobbled up or they're going to be out. Right?
Agreed.
We're going to have to see a Walmart or an Amazon version of a cannabis company do that. And I don't see 100 different growers. I see 1 or 2 massive growers, and whoever they are, that's fine. I do have a few medical marijuana stocks that I do own. Big on them. I do think there are some plays there still, but no, the whole cannabis thing, not so good.
Yeah, man. And it kind of comes down to the group think, because that's something as an investor, especially if you're a newer investor and you're watching this. And if you are a new investor and you're watching this webinar, congratulations for being being smart and trying to learn and educate yourself. But the ETF portion, the weed portion, the giant group think, when everyone talks about it, everyone's now an expert. Everything you see, it's something that's in your ear all the time. That is not the time to get in, right? I went to Christmas parties the year before last. Everyone's like, hey man, should I buy weed? Should I buy weed stocks? What do you think? I mean, everybody a year and a half ago.
That's when to get out.
That's when to get out. Yeah. Or at least not get in. One of the two.
Right.
And I was like, I don't know, dude. I wouldn't, because it's just too hot. Everyone knows about it. And I would say it's similar to what Bitcoin did around 18,000. Where right before the top, that's something you got to be cautious of as an investor. You want people to disagree with you.
When my Uber driver's giving me stock tips, I'm done. Yeah.
It sounds like but no, that's always the case. Yeah. Like that's always it.
Yeah. And I got a real quick question for both of you. You had mentioned, Steve, M&A. Do you guys think that if there are some companies that are going to survive, do you think that going the ETF route, the basket of cannabis stocks, is any better, or do you just still stay away completely on that?
Go ahead, Jeremy.
Yeah, it's a really good question, man. I would say if you are going to participate in an ETF like the one you have pulled up, the cannabis ETF, just do so very, very lightly, because right now that is in a power downtrend. I'm not saying it's not going to reverse or it's not going to change. I do like trying to pick bottoms. I really do.
Yep.
But I also understand that there is a company out there called Philip Morris, who's a little bit big. They've been around for a while, and they're not going to want people just stop smoking cigarettes. So they're not going to let weed overtake their tobacco sales. And so if anything, they're going to be buying out these companies. I mean, if you don't think that Philip Morris and Altria have perma shorts and a lot of these weed stocks, you are mistaken. So yeah, I think that's something that if you do play an ETF, Ryan, I think you're right. That's probably the best way to kind of diversify. Just do so very lightly.
Yeah.
For now.
Good. All right, let's talk cannabis. What's the next sector?
So the next sector, man, I would say this. A lot of people are really, really bullish on Tesla right now. I love Tesla. I'm a huge fan, but Tesla is probably not the greatest stock to buy at this particular price. So give this one some time. Let it calm down, ladies and gentlemen. I just don't think that this is going to be a $1,500 stock in the next week. Right? A lot of people, they felt the momentum. Everyone in the world was buying Tesla right around $920, and that was kind of like that was it. That was kind of the top. So I'll just say again, I love Tesla. I love it bullish, but it does have some lower lows to go before you would really want to start buying it.
I was going to say reasonable people tend to disagree. That's totally fine. I'm all about that, but this chart looks like a blow off top to me.
Agreed. Yep. Agreed. So NIO, right? A lot of people are like, oh, NIO is going to go up higher as well with Tesla's. Like, well, maybe. But a lot of people don't know how NIO makes money. They've never driven one of their vehicles. They've never had any interaction with a NIO before. So just be cautious and be semi-careful. You had a little bit of a run up with NIO along with the Tesla move, but those are sectors that I'm not insanely bullish on at this precise moment in time. I think Tesla just a little bit of a pullback, which is almost a guarantee. And then you can start kind of legging into it over time. Let's see. Another sector for me that I'm a big fan.
Before you go on, with Tesla, Ryan, if you don't mind pulling up the details page as well.
Sure.
I think what's important there, and I think you made a very good point, Jeremy, numbers still matter, right? Tesla at this price here, it's over $753, does not match the money that they're making and bringing in, right? This would put them at an valuation bigger than Ford and GM combined, right?
Yeah.
But their PEG ratio on, if you look at key data, you'll see the PEG ratio there is 2.408, out of control. PE ratio is 84. Payout ratio, 0. Profitability, 0. revenue of $24 billion. Just not enough money to cover the debt that they have. And that puts the tangible book value there at $33 a share, not $753 a share.
I like that. It's a really good details page brought to you by Wealth Charts. I mean, just keep that in mind, guys, where that's going to be, something you want to keep in mind of. I think the Benzinga Pro news feed.
Do you have a pullback price you think we'll see soon?
That's a really good question, man. Let me pull it up really quick and tell you. I think.
And while you were saying that, Tesla price stock is falling right now, or that's lost $3 in the last 1 minute.
I think about 541 actually is.
There it is. All right.
Yeah, so about another 200 points to go on the downside would make a lot of sense. So again, if I'm kind of drawing on your charts a little bit, this is a very, very normal, like Ryan said, kind of like a blow off top. This is a very classic pattern. So a drop like this, a little bit of a trade higher, maybe one more flush lower, a nice little run up. So that everyone's like, I'm bullish on Tesla again. It's going to the moon. And then you have a nice little drop back down to, again, right about that 550, 541 level sometime the next month and a half. That would make tons of sense to me. So we'll see. I'm a fan of it. Again, I love Tesla long term. I'm just not a buyer at this particular price.
Okay, so at 541, would you be buying the options or would you be buying the actual stock?
Great question. I'll be playing the options.
Yay, there it is. Short term, long term.
Yep. A little bit of both. I'm gonna do a little bit of flexing on both. I'm probably gonna sell some options. I'm gonna sell some puts. I'm gonna buy a little bit of out of the money calls down at that price point because my expectation is at this point Tesla has reached its top and it's gonna distribute for a while. So it's going to trade sideways for probably a few weeks. So I'll be doing a lot of option sales, ironically enough, where I'm just selling volatility and day trading it. So right now, Steve, I'll be selling it, taking advantage of the volatility, and I'll be trading the options for day trades.
Okay. All right. Let's go on the next sector then.
Beautiful. So the next sector, man, here's one that I think a lot of people feel like is overvalued. However, we're all using it all the time. Zoom. ZM, my man. Look at this volume coming in on Zoom. Like we're seeing some serious volume. Pop over to the weekly for me, Ryan, if you can. This just looks like institutional volume, and I really love the fact that it came down to its previous lows and kind of just retested those a little bit. I think that was a lot of fun down to that $60-ish price range. And again, from a chart perspective, you got what could be argued as an inverted head and shoulders pattern. You got a really good gap. You got phenomenal volume. You have a lot of room to go to the upside. But for now, man, Zoom, I mean, the thing is a lot of people are using it. That's the challenge.
We're on Zoom right now.
I was going to say, full disclosure, we are using Zoom to bring this webinar to you.
Full disclosure. That's it. Like that, we are doing it at this exact moment in time. So people like us are continuing to use it, and we don't mind it because it's a good product. Their video conversion is insanely fast. Like by the time we're done, you'll have this recording done in like what, Ryan, 2 hours, 3 hours?
Yeah, that's actually a really good point. I've actually been amazed. I do all of these webinars at the week, and I actually convert them, and then I actually use video editing software to kind of clean up the edits. And you're exactly right. The conversion from Zoom is so much fast. I use Camtasia, for example, in order to edit some video. The conversion from Zoom is orders of magnitude faster than that. It's really, really incredible.
What a great term, dude. Camtasia, which I also use. If there's anyone listening who uses Camtasia, I'm sorry. It sucks, but it works. It's one of those like, oh no. It's like your very first vehicle that you ever drove, which mine was a 1992 Plymouth Laser. That's how I use Camtasia. It's like it works. It'll get you there, but man, it's not good. Yeah. And so I like Zoom, man. I really do. I think Zoom has a good stronghold. They have good customer service. They're working on some really interesting revenue models. And I think that Zoom's going to have some higher moves because again, a lot of people are saying, oh, the price to sales is overweight. It's really not worth what it's trading at, which I'm not going to specifically disagree with that piece. But I would say that I don't think that the buyers care right now because it's a stable platform that, like you mentioned, that is a piece. I know it's a small piece, but that is a piece that no one else has figured out yet. And that conversion saves customers like us, users like us, time. and time is money. So therefore it's going to continue to go up.
And what do you think in comparison to like Microsoft Teams, which I'm seeing a lot of advertisements for now with the whole teleconferencing and getting your employees to work together from everywhere? Do you think that this rising tide lift all boats, or do you think that some of these will actually compete with one another?
Definitely, there's definitely going to be competition, and Microsoft is going to try to carve out as much as they can. But if anything, Microsoft ends up buying out Zoom. I think this is a buyout-worthy candidate. Zoom is. I mean, I don't think they're going to be a standalone product for the next 10 years. I really don't. They're going to have to get acquired at some point because honestly they're too good. Is what happened. They got too good too fast. I mean, think about this compared to GoToWebinar. Just how many people are converting over. Because of that freemium model that we kind of talked about previously. So they're just doing it well. And I'm really interested to see what they do from here.
I would think that they would pursue the advertising level, you know, in the right-hand corner, left-hand corner, the box is the Zoom video brought to you by XYZ company, like they do with YouTube or those kind of Twitch maybe.
Didn't even think about that. That's a great point, Steve.
Yeah. And I think, I can definitely see them being bought out. I mean, Microsoft's had some problems with Teams already, right? But Zoom has cracked the case for video all the time and on demand. And just like this, right? People are, they're tired of watching TV and they're wanting to see people like you and me.
Mm-hmm. Yeah, man, I kind of agree. And I think that's a really interesting product. Another one that I'm more bullish on than most people would assume is Uber.
I'm definitely not bullish on Uber.
That's fine. That's fine. That's okay. I am.
You're going to have to tell me this one. I mean, Uber's made a heck of a run the last few months. I use Uber all the time, but they are having to ply me with 5% off, $20 off here. I got, I just went to Vegas. I got 25% off going to the airport. I mean, they're really having to do it. And I don't use Uber Eats anymore.
Yeah. So what's interesting on Uber, man, is it has become a consumer staple. Meaning what they're doing right now is they're doing the Amazon model where they discount everything up front initially so that we all get used to using it. Mm-hmm. And then they'll just kind of go, all right, this is the baseline price now, and everyone will start using it. The 2 or 3 really, really big things they're going to have to overcome are some of the lawsuits and some of the challenges with like the contractors. The state of California is giving them a little bit of a lawsuit for. They're working on some other challenges, but other countries, man, like I was in Dubai 2 weeks ago, and Uber is everywhere and it's insanely cheap. Uber is in India and it's insanely cheap. We're forgetting how many other countries are using Uber, and the answer is there's a lot of them. Lyft, I believe, is only in the US. So you have that Lyft competitor, which is only okay. Every single time I've ever used Lyft, in the small pockets where I needed a car, they didn't have one. Flipped over to Uber, boom, got a transportation immediately. I think they're okay to lose money for a long period of time, and they are a verb. And I know that sounds crazy, but one of my fundamental long-term approaches to invest in a company is if it becomes an active verb throughout modern day society and articulation, then I'm long-term going to be bullish on it, because if it's into society, if the society has adopted, let's Netflix and chill, let's go Google this, right? Let's hop over to my Facebook and do this. Let's go check Instant, do this. Let's take an Uber. No one says, let's take a Lyft ever. Like that just doesn't, no one says that. Everyone's always using the word Uber, and therefore they're going to continue to get market exposure. And I know they're losing money, but I just see so many people bearish on this thing that I kind of have to be bullish.
Yeah, and Jeremy, you bring up a really great point. I'm someone that actually regularly uses Lyft, and I don't think I've ever said I'm going to grab a Lyft. I've always said I'm going to grab an Uber, and you know when
and then you still got a Lyft.
And I end up taking a Lyft, and Lyft is just the app that I have on my phone. I got accustomed to using it. I still refer to it as Uber. I'm sure they're not happy about that, but it's a really good point, because the same thing happened, like you mentioned, with Google and Netflix and chill. I mean, I Google stuff. I ask people and I tell people to Google stuff every single day, single day. And not a week goes by where I don't discuss Netflix and chill. So, I mean, it is what it is. I think that's a really good point.
Yeah, man. I mean, again, that's just my opinion, but I've been relatively bullish on Uber since it kind of gapped down that price range on the last earnings, so around 28, and kind of since June of last year, My plan on Uber has just been to buy 10 shares every 2 or 3 weeks and just slowly add to a position over time. And that's been treating me pretty well for the last 2-3 months.
But for me, I mean, there's a couple of things going on here with Uber. You know, in New York, we have Arrow and we have Curb, and London is pretty much banning Uber. So I think they got some pretty big headwinds over at Uber. And
100% agree.
They just got rid of Travis Kalanick, and he's still got a whole bunch of shares to dump. So I'm a little bit nervy over Uber.
Yep,
So
and I get it. Actually, I love the union battles, because my thought is, it's like, okay, you're 100% right. If they get squashed, then that's going to be some big problems. But if they don't, which I eventually think the tide's going to slowly go that way. If they don't, man, you start capitalizing on all the cities other than New York. New York is its own thing because it's so big that everyone in New York just, like, they have their own apartment finding companies. They have their own, I mean, 97% of the companies in New York can just live off of New York people alone. They don't have to be bigger. So you're right. You can have just rideshare companies that only survive in New York City, but you have those companies that are never going to go international, like in Dubai or India or California or Dallas or Hawaii or whatever.
And I also find that a lot of Uber drivers are not happy. I mean, a lot of times when I jump in an Uber, they're complaining because the counterparts of taxis are making more money than they are.
Some of them, yeah. And again, man, that's the arguable point. If any of that gets fixed, what's going to happen to the share price?
I see, yeah. So,
you know, that's the thing. And so my viewpoint is, man, you have a rocky cliff, not denying that at all. The fundamentals are absolute dog shit. Like, they're rough. I totally am on board with you. All of those pictures are really rocky, but the stock price is giving me a little bit of a different insight. Like, the chart looks clean. So my thought is, yeah, man, if we fix any of those major issues, this is going to be.
I'm looking at the balance sheet of cash of $12.65 billion, total assets of $32 billion. I take it that's the software. But long-term debt's 5.7 and total liabilities is 16.5. So you've got $21 billion of debt to cover up with only $12 billion in cash.
Yep, agreed. And so that's the part that's not that alluring. Mm-hmm. However, that is a lot of cash. You know, it is. Like, if they make some good investments with that, if they do the right thing, if they hire the right people, I mean, the debt piece, you know, it can be managed.
Well, what about a company like Tim Cook and Apple maybe buying out Uber? You think that could happen?
People have been dreaming for it, man. I don't know. I don't think Apple's going to do it. If anyone's going to buy out Uber, you probably know what I'm about to say. It's going to be Tesla. Yep, it's going to be Tesla, because if they can connect that software piece to their autonomous vehicles and their taxiing and their driving, that's a wrap. That is a wrap. And I don't know if that's going to happen, but I would like to speculate and say that would be really cool if it does.
But those two companies combined would have so much debt. I think it'd be like the national GDP.
It would be like the U.S. government.
I think the government had a better balance sheet than those two companies.
It would be horrible.
Wowza.
All right, we have a question coming in already. So from Kareem, all right, who do you like for biotechs? Got any biotech plays out there for yourself?
Man, you know, I'm not the best biotech player in the world. It's not a space that I live and breathe. But I would say I do like Biogen. I'm really interested that their earnings were a pretty good beat overall. I mean, they had earnings of $8 a share, which for a biotech is not bad. Their last earnings was $8.39 a share. Their last earnings was $7.85 a share. So they're doing pretty well, I would say, as far as just their earnings. Like, their balance sheet, we're talking balance sheets, do not look horrendous. It's a little bit more of an expensive stock, premiumly priced, and it's been in a distribution phase for a long time, but it needed to be, because Biogen went from 40 to 400 in 5 years. Yeah. You know, that's a 10-bagger. That's a massive, massive move. So right now we're distributing. But with earnings like they've been cranking out, man, I don't hate it. I really don't. Most people, when they play biotech, they want to play a lot the cheaper ones. I can respect that. Like Lake, L-A-K-E, Lakeland Industries. I don't even know if that's a biotech technically. I think it's like a.
They make the suits. Yeah.
I was gonna say they're hot in the news because of the coronavirus thing, which is just a repeat of Ebola from a few years back.
Thank you, Ryan. You are the man. That is exactly what I said. Like, a lot of people are like, Lake's going to the moon. was like, I don't know, bro. I think they're gonna go to 13th Crescent Street because this is what it did last time.
Yep.
And Ebola, in my opinion, is scarier than the coronavirus because Ebola is terrifying. All right.
Yeah.
I
Yeah,
studied
absolutely.
Ebola in high school chemistry class. I did not study the coronavirus. So it's just in my brain, Ebola is scarier. I think the corona thing, man, hear me out. I think it's just going to blow over. I don't think it is going to have as nearly as large of an impact as people want. I would say, obviously, I think it's terrible for anyone to ever have a loss of life, regardless of what it's caused by. But 14 times more people die every day from a car crash than coronavirus. And that's going to happen for the next decade. I don't personally see this being an issue in the next 2 years. We're not going to talk about it. We're going to say, oh, remember that weird thing that happened? And that'll be it.
Well, about a month ago, I was very hot on co-diagnostics, CODX. But I will tell you, I've got 2 plays I'm playing right now, and this is a good time to let everybody know, we're not telling you what to buy or what to sell. We don't do that here. We just talk about the stocks that we know, right?
Yep.
But the 2 that I'm playing right now pretty heavily is VTVT. That's VTV Therapeutics. I really like this company a lot. And I like APDN, which is Applied DNA Sciences. One of the things that's happening, and you said you don't like playing the smaller biotechs, when they are popping and having a good day, quite frankly, they are going back to the well and asking for more money, right? So either they do reverse stock splits or they are doing a stock offering, and both those things are very scary down there. But like yourself, I like picking up those cigarette butts, those cigar butts, as Warren Buffett calls them. And I like it when the things get pretty cheap. And in the biotech sector, the one thing that I've been pushing, and especially since last Tuesday, the president said, and he's been doing it for a long time, that the FDA will continue to keep approving drugs. He's bullish on that. So you know what? If he's okay with approving drugs fast, I'm keeping my eye on the FDA biocatalyst calendar, and I'm pretty much buying whatever the heck I can buy out there. That's a pretty good company. So APDN and BTVT.
I love it. No, thank you, man. Yeah. So that's just not a world that I live in, but I can say this, just looking at that chart on APDN, I really am intrigued by today's candle on APDN. If we start taking out the high that came in, like an hour after market open, 518, that could easily have a 50% pop. I mean, that wouldn't take much at all. Honestly, 2, 3, 4 days of sideways movement and then a break above 518 just for a quick, fast, I want to make some money, get in, get out. Absolutely, man. Why not?
I'm also looking at a few others. I'm looking at my positions now. I've got Origin, which is OGEN. Another one that I've just picked up is Iterum, which is ITRM. You'll notice Origenics has had a pretty good last couple of days. How did I pick that out? Very simple. I saw the volume moving into it, and then, of course, the news popped that it's working on another coronavirus there. But Iterum Therapeutics is one that isn't about either the coronavirus or anything specific right now, but I really like them a lot. I think they've got some stuff coming down the pipe really close, and they just did their offering, so we shouldn't see any problems there. So,
yeah. So when you're playing something like this, Steve, how do you scale in, scale out, or do you kind of just like, yeah?
Yeah. So I don't let my eyes get bigger than my tummy. So if I know that I have a certain amount of money that I want to allocate to the biotech worlds, I'll tell you right now that in my portfolio, I only allocate 10% of my portfolio to lower quality here biotechs. And out of that 10%, I break it up. So I have a good number of about 80 stocks in the biotech world that I break that number into. So
interesting. Okay, so you take 10% of your portfolio and just allocate it towards that sector. That's cool. Okay.
Yeah, and then that way I'm not hurt. If something jumps 150%, I'm happy. If it doesn't, then I'm not unhappy, right?
Right. Right. I can respect that. Heck yeah.
And then when it jumps, I take half off, I let it run, and I keep it forever. So that's why I have a huge portfolio in biotech, because I let them run, and for the most part, they're free, right? So once a stock jumps 60, 50, 60%, I take half off, and then that stock becomes mine forever, and I don't even care where it goes at that point.
I see. Okay. Yeah. 'Cause that way, if you have one big winner, it makes up for pretty much all of them at that point.
Exactly, right.
I love it.
Because I think
That's
a
a
lot
really
of
good
times
approach.
it's the lotto plays, right? And whenever we hit the lotto, it's great. But then a lot of times we don't hit the lotto, and it ends up tearing out the portfolio. And I don't want to ever see anybody have to blow up a portfolio over biotech stock.
Yeah, no, it makes loads and loads of sense. Another stock, man, that I really, really like is LAUR, Laureate Education. It's pretty much, I guess, the easiest way to sum it up is kind of colleges, university company fund for Latin companies, Latin countries as well. So LAUR, I love the chart. If you go to a weekly chart, Ryan, I'm a fan of the charts like this that trade sideways for, around 2 years and has a good breakout and good volume. So I do want it to pull back some, but I am beginning to leg into some positions longer term on LAUR. Earnings around in March. Last earnings, they were a miss. So even after a miss, we still ended up trading up pretty high. So as we start pulling back into the low 19, high 18 price points, I'm going to start adding to more to this position and try to be in this one for at least a year and a half, 2 years is kind of my goal. Because I think this one doubling is relatively easy since it's pretty similar, very similar to GSX, which is a technology software education company as well. GSX has just been absolute screamo for a little while. And then EDU. Yeah, so a very good chart. So EDU and GSX are relatively similar competitors to LAUR, and I feel like all of them are doing quite well. So that's kind of my thoughts.
I like the Latin American sector. I like that a lot. That's a great play. People have been asking me, why is our market going up? And I said, we're the only game in town, right? And other countries just aren't doing it. Europe is really hurting. China now is getting the double whammy. Russia's getting hurt too as well. But one area that I do like, and you just mentioned it, was Latin America. And the one that I like down there is Grupo Televisa. The ticker there is TV. And they do telenovelas. They, all those crazy. And so we're starting to see a little bit of a pullback here. And I think if it can get down to about 9 or 8.5, 9, I will be picking it up again. I really liked it down there at $8. It was a good fun trip to about $12. I dumped it, but I think you can do it again. So, but I think the play there is them getting bought out. I do think the whole sector of TV is going to be starting to combine.
I like it. I like it a lot. Oh, that's a good question from Mike in the chat pane. Steve, if you want to handle this one, I'll take the back end of what you say.
Yeah, question here is any advice for someone like myself who is in college and brand new to all this? If you don't mind, I just want to jump in here real quick, Steve, and then I'll turn it over to you two gentlemen. I would say that when you're first starting out, try and trade what you know. Try and trade things that you understand, that you see every day in your life, because it's going to be a lot easier. 2 reasons. Number one, you're going to be able to understand news and different things that come out about that company. And because you use it, you're going to see it every day in your daily life. You're going to know what something good or bad is, and how it can be used, and what demand might be. I've always been successful in trading what I know. When I first started, I'm big into technology. I'm big into video games. Technology stocks were the things that I paid attention to. I cut my teeth on those, and then I moved into other areas that I wasn't as proficient in. So my advice would be trade what you know early on.
All right, I'll take it next. That's a great question, Mike, and I'll tell you how it happened for me. Now, Ryan's absolutely right. I always tell people, trade what you know. But for me, starting out, I'm going to tell you exactly the answer, okay? Listen up. This is exactly the answer. Latch on to people like Jerremy Newsome, right? When I was starting out, I didn't know anything about the markets, and I met a guy named Jesse Curry who traded commodities. He was a Green Beret. He taught me commodity trading. He taught me futures, and I latched on to him. I went to the parties with him. I got up at 4 o'clock in the morning. I did everything I could to learn and glean from this one guy who was pretty much the only guy around me to trade commodities, and he taught me how to trade corn, wheat, soybeans. Now, is that big to trade the stocks? Absolutely, because you had to learn bonds. You got to learn Forex, which is currency. That's what got me into the markets. And I said, okay, well, after I learned commodities, stocks were boring, right? Because futures are a lot faster, bigger, less money, bigger play, bigger, lower risk, bigger reward kind of thing. It also helped me learn to trade cryptocurrency. But I'm telling you, once I got into that world, then I could grow from that, right? Once I learned from Jesse, he introduced me to other stockbrokers, to other people in the game, floor traders. I went to Chicago because of it. I traded the floor there. Why? Because I latched on as somebody who was in the game.
Well, I mean, I have to agree with that answer.
Why? Because it's you, Jeremy? Yes, I love that. Yes.
That was so kind of you, man. Hey, first of all, thanks, Steve. It means a lot. But Mike, that's a very good question. Number one. Number two, we both Ryan, Steve, and myself are very happy that you are taking the initiative, right? You're in college.
Absolutely.
You're not learning any of this in college, so sorry. Thanks for being here and thanks for watching this, but I've already been down that route. I got a finance degree at the University of Florida, and they didn't teach me anything about the stock market, just a bunch of coupon yield rates and accounting. So I would say, I'm going to agree with both Ryan and Steve. I'm going to blend them. Is number one, you do have to find someone or a mentor, someone that does give you instructions and give you thoughts and give you ideas that are beneficial to you in your life, something that you resonate with. If you don't like the person, move on. There's a million other people out there in the world, literally, that are doing this. So for me, man, my guy was Warren Buffett. I know that sounds lame, but it's not, because he's like, the fourth richest person in the world, and did it through the market. Pick someone that you just like, that you resonate with, that makes you happy, that makes you smile, and then stick with that person, like Steve said, for a while. I just did everything Warren Buffett did. I read everything that he taught, any video that he created, anything that was on YouTube that had the word Warren Buffett in it. I read or watched it or did both. And man, that helped out so much, because then it takes what Ryan said, right, Mike? And it takes you and makes you focus on things that you know. So the companies I made a lot of money on recently were Square, ticker symbol SQ, because I know exactly how Square works. I know how they made money. I interact with them on a daily basis. So when Ryan says interact with companies that you know, he literally means not companies that you heard about, that your friends are talking about, that your buddies are saying, hey, you should buy this, you should do this. No. You want to buy things that you actually know, things that you can tangibly touch. So your cell phone, man, I made a lot of money from Verizon and T-Mobile, and AT&T, Square. Oh my gosh. Like, I loved Square ever since the IPO. Shopify, another one. Wix, another one. GoDaddy, another one. Starbucks. All of these companies are companies that you interact with every single day, Mike, that you can make plenty of money just focusing on those companies for now. Build up your cash, build up your network, and if you build up your network, you'll build up your net worth.
That's actually a really good point. Jeremy, I hope you don't mind, but I actually may use that going forward.
Bring it on, baby.
Build up your net worth. I love that. That's phenomenal.
Thanks, man. I steal stuff from you all the time, so that's
Jeremy, you've actually got a book too, don't you?
I do, man. And it's not actually 100% focused on the stock market like a lot of people expected or wanted it to be. It's okay. It's called Money Grows on Trees. I will be writing a stock market specific book at some point in the future, but Money Grows on Trees is what I ended up finding out through a lot of, working with a lot of traders, is if I had two people, let's just say as an example, you have Ryan and you have Steve. You have two people, one named Steve, one named Ryan, and they have the exact same knowledge, the exact same information, looking at the exact same chart, and they have the exact same amount of money. And one person trades and makes money and the other person doesn't. What does that come down to? And a lot of times it comes down to mindset and their belief on what they want, what they deserve. So this particular book that I wrote is focused 100% on just the mindset and your beliefs about money and the thought and the things and literally the thoughts that you have and how they can either be holding you back or propelling you from making what you want to make as far as monetary gains are concerned.
And I have put that link to your book on Amazon inside the chat. So people
thanks, man.
Yeah.
I appreciate that, dude. Thank you. Thank you very much.
All right, Jeremy. So tell us something about yourself that no one else knows. We know how you got started in it, but what's something inside of you that drives you, keeps you going, moves? For me, I'm up at 4 o'clock in the morning, 5 o'clock in the morning. I'm getting ready for the market. Tell me about your routine.
Sure. That's a really good question. I will say this. I have been constructing my routine a little bit over the last few years and kind of like trying to find out what works best for me. There are traders and there are people that have the mindset of, hey, you have to wake up at 4 or 5 a.m., do massive work, and then get everything done. For me, I kind of more am I wake up at like 6:37 kind of guy. And then I go to sleep around like 10:30, 11. So it's like that 7 hours of sleep-ish or time frame. That's been what more my specialty recently. I used to do the really, really early morning thing. And I still do every so often. But the big challenge for me is I don't sleep that well. So I have to take a lot of like sleeping pills in order to go to bed because I'm just so fired up about everything.
Yeah.
So in order to sleep in, like I get really groggy in the morning. So I just want to get like a good 6-7 hours of sleep in and then wake up. And then once I wake up, I start checking the markets. I look at the markets. One of the first things I do when I wake up is I just get into the market and just kind of get an idea of what it's doing that day. Kind of get a general idea of the sentiment, look through articles, look through Twitter, look through the news stories, and just see, are people really bullish? Are people really bearish? Is it gapping up? Is it gapping down? What's the broader market doing? And then just kind of go in and look at a list that I made from the previous day, right? And look at that list of what was interesting, what was appealing to me. I think that's something that every professional trader should do every night, is just get their collective thoughts on either paper or video or whatever you want to use, but get it down so that it propels you into the next day. Because a lot of traders far too often act in the moment. And if you're acting in the moment, the market is tractor beaming you. And if you're getting tractor beamed, you're going to lose. So you have to try your absolute best to take previous person and apply it to present day time, because that's when you're going to act the best. So I really do a lot of that, man. So I just take all my information from yesterday, try to apply it to whatever day I'm currently in, and then look back and go, all right, I thought Amazon was going to go up on Wednesday. Let me carry that forward. And then boom, Amazon's up really nicely today. Then I'm going to start trading it and kind of acting on it. So those are the two biggest pieces for me. Something that most people don't know that I did was one of your first questions, Steve. So I don't have the sense of smell at all. So my nose just does not work. And the reason is because I started a miniature fight club when I was younger without knowing it. So my dad bought a bunch of styrofoam.
The first rule of what?
Exactly. So my dad randomly bought a bunch of styrofoam pallets one day. I still, to this day, have no idea why. And it was like 30 styrofoam pallets. And I put 4 of these pallets together, and I put rope and sticks around them. And I had people pay $1 to watch the fight or $5 to fight in the fight. And if you won, you got all the money. So I did a lot of like fighting as a kid from age 6 to 12, and then broke my nose so many times that I can't smell. So yeah, that was another way that I made a little bit of money, man. I was a hustler from age 6 on. I've just always been like, my mom would hand make all of my food, my lunchbox. I would go to the school and sell everything in that lunchbox every single day.
That is awesome.
Yeah.
That's
That
amazing.
is awesome.
That's hilarious. I used to hustle when I was younger too. I was super into cars. I built up a Trans Am that looked completely stock, but man, that thing ran like a bat out of hell. And I made plenty of money with that. I gotta say that's not quite as good as starting up your own fight club when you're younger, but hey, to each his own, man. That's good stuff.
Thanks, man.
Man, this has been a tremendous morning here. I love this. This has been great. Anything else, Ryan, for us?
Yeah, I think we answered all of the questions there. I just want to echo your sentiments. Jeremy, this is an absolute pleasure. I really appreciate having you on, giving us the time. I love all the discussions that we've had, all the different sectors that we covered. So, yeah, I really appreciate it. You guys were great.
Yeah, likewise, man. This was a lot of fun. And Rich says it was a great webinar as well. I echo those sentiments, Rich. So Ryan, Steve, the Benzinga team, thanks for allowing me to be on here and for giving me your time today as well. As a pleasure. So guys, go make a lot of money from this webinar, because go watch it. There's a lot of really good takeaways. I'm very serious. Like when 3 people like this who are in the market all the time are in the zone and we're just talking and just, brains coming out and what we're trying to get, this stuff is valuable. So make sure to go back, listen, read it, and get all the takeaways you can.
All right. And until next time, folks, remember, happy trading.
See ya.